Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
So today's economic calendar will see traders being solely focused on the PCE price index report being released at 3:30 South African Standard Time today, which is one of the FMOC's primary inflation gauges, and this will give us more insight into the future monetary policy within the US economy.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar is likely to build on its recent gains in the weeks ahead, as there aren't many catalysts for bears to latch onto. That could sway expectations for the 3-month Federal Reserve rate hikes. The dollar index rose yesterday by 0.03% to 104.55. Recent data is pointing to signs of economic strength and sticky inflation that can keep the dollar supported in the near term and potentially into the 22 March FMOC meeting. Having a look at today's analysis on USDZAR, we can see that we had a beautiful buying opportunity yesterday. And today, USDZAR again still with bullish EMAs and still hovering above that support level of ours. If it can actually break back above that 8 EMA on the 4-hour level, that would be around that 18.25 Rand to the dollar. This could spark further buys back up to our primary resistance level at 18.50 to the dollar. There is, however, a double top formation that has been formed on the 4-hour time frame. However, before I would be looking for any sells, I would wait for that primary support level at 18 Rand to the dollar to be broken first. Now let's move over and see what's making headlines on Wall Street. US indices finished yesterday in a positive territory. Equities rebounded from earlier losses suffered yesterday, even as economic data continued to show the strength in the US economy and validated the Federal Reserve's tight monetary policy stance. NASDAQ regained earlier losses from better than expected revenue at chipmaker Nvidia. The result drove the company shares up 14%, along with shares of other semiconductor manufacturers. The Dow Jones also rose 0.33%, and the S&P 500 gained 0.53%. Having a look at our analysis on NASDAQ, yesterday's rebound brought us back for a retest on that primary resistance level at 12,200. A break back below our EMAs on the 1-hour level could spark further sells back actually even further to that 11,900 level, which is also our primary support level. Should NASDAQ, however, today break that 12,250 level, this could spark potential bullish movements on this specific instrument again. Now let's move over to commodities. In what must be a relief to bulls in natural gas, the heating fuels price did not go to the $1 level, feared after a break of the $2 support level. But with only modest cold forecast over the next 3 weeks through the end of winter, the challenge may not be over yet for longs in the game. Looking at our analysis on natural gas, we can see that we are currently hovering just below that $2.5 level. Now, should this be broken, this could spark a slight rally within natural gas back up to our primary resistance level, which is around that 2.7 level. However, if this $2.5 level gets respected and we actually break back down, we could see further sells back down to that support level, and we could see a potential retest on that $2 level. Now having a look at oil. Another week, another big US crude build, and another positive close on the oil market, which seems to prefer catching up a day later to the fact. The Energy Information Administration reported yesterday a 9th straight weekly rise in US crude stockpiles that left the market with 60 million barrels more than at the start of the year. Oil bulls, however, pushed the data aside and focused on the report that Russia plans to cut crude exports from its western port by up to 25% in March versus February. Yesterday's rally within crude oil pushed us back up to our primary resistance level, which is at that $76 a barrel level. Should this level be respected and the bears get back in the market, we could see potential sell-offs back down to that $74 a barrel level, which if that gets broken, we can see further sell-offs to that $72 a barrel level. However, should we break above and get to that $78 a barrel level, this could spark further bullish momentum within this specific commodity. And finally, having a quick look at gold. Gold prices fell further yesterday and are set for their fourth consecutive week in the red amid growing uncertainty over the US monetary policy, with markets seeking more cues from a reading on the Federal Reserve's preferred inflation gauge later today.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.